Hi, this is Dylan Jovanet with Behind the Markets. You know what I've learned I've learned as an investor, you're either playing checkers or you're playing chess. You're either thinking short term or you're thinking long. And one of the things that benefits me the most is we're watching these headlines with Putin and Ukraine and Russia, and it's insane, really. I mean, literally, Putin just accomplished what Trump spent 4 years trying to do. He unified NATO. I mean, I don't understand how this is not it'll go down in history as one of the biggest strategic miscalculations ever. Having said that, for Putin, it's going to make him weaker. It's going to make us in the West stronger. It unified everybody. I mean, it got Germany to spend 2% of its budget on defense, which is what Trump was trying to do. So basically, Putin did what Trump couldn't do, and nobody could do, really. But at the end of the day, Russia, Ukraine, despite the fact that it's in the news every day, despite the fact that it's killing our headlines, it's right there, it's war, it's in red, it's crazy. Despite all that, it's not that big of an effect on the economy. It's not driving the stock market. I mean, there's like a little excessive fear from the red headlines in the news about war. But some people, nuclear war, they're talking about World War III. That's not happening. We're not talking about that. What we're talking about is Russia making a massive miscalculation going into Ukraine. And frankly, from an economic perspective, it doesn't even affect us that much. What is driving the stock market? So any sell-off based on the war in Ukraine is kind of it's almost a gift, because it doesn't affect us economically that much. And they're selling it off the market like it's World War III. So it's not World War III. So the sell-off is a panicky sell-off. Oh my God, it's the end of the world order. But those are lemmings, they're screaming. And one thing I've learned is you're either playing checkers or you're playing chess. You're either thinking short-term or you're thinking long-term. And if you look at the market in a long-term perspective, war over time is going to bring up the market. I mean, 91, the market went down when when Saddam Hussein invaded Kuwait. We went in there, boom, market went up. 2003, we invade Iraq. 9/11 happens in 2001. Of course, market crashes, goes back up, and then 2003 happens. Market crashes at first. It goes down for the few months, and then boom. Always the market is higher. And that's because we in America have created the greatest system for wealth creation in human history. Now, having said all that, so the war is tragic as it is, for the Ukrainians, and it is tragic. It's going to get worse. Russia will very likely take that country and lock it down. Whether they can hold it is a completely different story. I mean, I don't know how a 200,000 person army holds a country supplied by the West that has 40 million people. I mean, I don't know how that's going to be a problem for them. But, we shall see. But I think they're going to take the country. Again, I don't know if they could hold it, but they're going to take it. Russia has a pretty powerful military, and they've been tactically, strategically trying to be very light-footed so they didn't turn the population against themselves. So I think the minute Putin takes Kiev, if he does take Kiev, he will try to look for an exit, get rid of that government, try to look for an exit, and pull his troops back to the Donbass regions. I mean, that's like the most logical thing to do. But then again, he hasn't really been logical here. This has been a major strategic miscalculation. I think it'll go down in history as such. Having said all that, the action isn't with Russia, Ukraine from a stock market, American economy point of view. That's not going to really dramatically affect our market. The action for us as investors is Fed Chairman Powell this week. They want to see if he's going to come out and say, we're going to raise rates by a half point or a quarter point. That's what they want to see first. We're going to rush it. We're going to do it 8 times. We're going to do it 5 times. So the market's really pricing in kind of worst case scenarios. And look, when you see red headlines on Fox, CNN, MSNBC, everywhere you go, when you see everything's red, war, red, people get scared and they think like checkers players. But when you pull the camera back and you look at the chart of the Dow Jones over time, chess players know that it's getting a lot closer to time to buy than it is to sell. That's all I have for today.